Cava shares have been on a tear, hitting a record high today, more than doubling in 6 months. Joining us to discuss the setup ahead of earnings after the bell is Nick Setyan of Wedbush. Nick, good to have you. You know, restaurants have been going through some things, whether that's McDonald's, we'll talk some Chipotle, Starbucks in a minute. But I wonder how you're thinking of Cava, especially valuation per store, which some have argued is pretty unprecedented in the space.
It really is a tricky setup. You know, we're hitting all-time highs every day here. Consensus is ahead of guidance. The buy-side expectations are ahead of consensus. So not only do they need to beat, which they will, they need to raise guidance by quite a bit, which, you know, given their conservative nature, I'm not sure if that's going to happen. So it'll be interesting to see how the stock reacts. But, you know, all things considering, they're one of the winners in the space. They're one of the major market share gainers in the space. You know, in an industry where you can count positive transaction restaurants on one hand.
Is unit growth a story on this name?
Yeah, absolutely. Absolutely. It's one of the fastest unit growth stories out there in restaurants today.
Where does it rank in your universe overall relative to some other names that you might have, say, with the buy rating?
It's probably in my top five, Carl. I mean, it's you know, again, I mean, given the dearth of transaction growth and the challenges facing the industry, you know, the lack of growth overall on top of, you know, transaction growth, there's only a few names you can go into if you are a growth investor. And that just gives you that sort of, you know, premium given the dearth of any other options.
And I think among your top ideas, correct me if I'm wrong, DPZ, Cake, and Chipotle, are those the three?
Those are my top three, yes, that's right.
What do they have in common?
Well, they're all, you know, positioned to do relatively well in a hyper value environment, Carl. You know, Domino's within QSR, you know, is always the value player, and so you know, as that sort of lower income customer focuses more and more on check management, Domino's is and continues to win. You know, Cheesecake doesn't have too much exposure to that sort of you know, meal replacement, direct meal replacement consumer. You know, they do tend to have much less volatility in terms of, you know, top line sales because of the productivity of those stores. So they have a lot more visibility into margins. They have a couple of emerging brands like North Italia and Flower Child that you know, you may not have heard of, which is really an underappreciated part of the growth story there. So I think over the next year or two, that's going to become more of the valuation. And then Chipotle, you know, I think the whole, you know, fiasco after the CEO left is way overblown. They have a deep bench there. You know, their setup is extremely attractive, and I still think relative to their sort of growth rates, they're actually inexpensive.